So one day you're sitting on a couch watching TV and accidentally you find $5,000 in cash between the cushions. What? It's a pretty relatable situation, we've all been there. And look, now you have $5,000 and you have no idea what to do with it. Well, fear not, oh lucky one, since I will guide you to a journey in the world of options trading, scrapping pages of difficult math to calculate our best way to turn that $5,000 into zero. No, I'm kidding, obviously. Anyway, I think it would make an interesting video talking about my favorite ways to trade options and what type of gains to expect. Also, I got a comment question about a similar subject, so I got you, bro. And look, if you have a question or a suggestion, leave it in the comments. We all have the same goal here. Let's take this journey together. Just a side note here, why did I mention $5,000? You see, initially I thought of mentioning just $1,000, but the thing is, it's very limiting. There are just a handful of stocks that we can trade in this case. Well, I mean, we could fool around with some penny stocks, but that's not what we want to do here. To me, $5,000 is the golden middle that can give us some room to diversify our trading strategies. And I've categorized those in three, based on risk, returns, and how much time is needed to manage them. The first one, and the easiest, and please don't hate me for it, doesn't involve options at all, but I feel like I have to mention it: buying stocks and getting dividends. We all know about it, I'm not gonna spend too much time explaining how it works, but if you pick what's a common stock with good dividends? AT&T. Yeah, I know, everybody mentions AT&T when they make a video about dividends, but it's because they indeed have a good percentage yield. Currently is 7% per year, so if you invest $5,000, then per year you will receive $350. And of course, if the share price will rise, then so will your investment of $5,000. So to summarize, with dividends you can make 3 to 8% per year depending on the stock you choose. It has relatively low risk and you need zero time to manage it. The second strategy is selling cash secure puts and cover calls. Now, if you already own 100 shares of AT&T, why not sell covered calls against them and collect premiums along with the dividends? I actually dived more deep into this scenario in one of my videos. I did the math and everything. You could make an additional 6-7% per year from selling covered calls. And that is if you're dealing with AT&T, which is a low volatile stock and the premiums aren't that high. But what if we can sell covered calls or cash secure puts on stocks that have options with high implied volatility, which means overpriced premiums that we can collect? And we can find these kind of stocks on this website. There are probably other ways to find this, I'm sure many brokers have these filters as well. I'm using this website, it's free, it works, does the job. So if a stock has a catalyst, which is a fancy word for saying that some event is expected or some reports are yet to be released, that will increase the implied volatility, which is what we want when selling options. Say, not long ago NEO had an event called NEO Day. In general, NEO already has high volatility, but prior to this event it was even higher. And if you were to sell a cash secure put during that time, you could have collected $200 to $400, which is translated into 4 to 8% from our used collateral of $5,000 in 1 week. 1 week. Obviously, around this catalyst you ought to be careful. You don't want to be too greedy and catch a falling knife, as the stock may drop and you will be left holding a bag of shares that you don't want. Or you could go the other way. You sold a covered call, but the market price went above your strike price and now you're obligated to sell your shares and missing on bigger profits. My favorite number to work around is 1% per week from my investment. So if I have to sell a weekly cash secure put and lock in $5,000 as collateral, I want to collect $50 in premium. This number has worked for me in the past. If you're more aggressive, you could make more, of course, nothing wrong with that, but 4% per month is middle ground, or $200 from a $5,000 investment. This strategy has moderate risk and requires moderate maintenance. The third and last strategy is poor man's covered calls. Now, I'll be honest, when I first learned about this, I didn't thought it was real. It feels like a cheat code, and I'm not being sarcastic. The way you do this, you buy a call deep in the money with an expiration date of 5 months or more, and you use it as collateral to sell weekly covered calls. So instead of owning the shares, you own a call that costs less than the shares, thus giving you the opportunity to make more money from the $5,000 capital. And look, I'm sorry, but I have to plug in my other video here where I explain in more detail how it works. It's just difficult to fully cover this subject in a couple of sentences. Regardless, the type of returns I am expecting to make with such strategy is 2 or 3 times more than if I were to simply sell covered calls or cash secure puts, so that will be 8 to 12% per month. Keep in mind that because you own this long call, your balance will have unhinged waves. You will move up and down like it has drinking a gallon of coffee. All you gotta do is just relax. If you pick the stock that has a general uptrend, there's nothing to worry about. If the share price will increase in value, so will that call. If it's deep in the money and has a high delta, it's like owning the shares. That's why I am giving this strategy a low risk mark and a moderate time management, as you have to periodically keep an eye on the positions and roll them over when you have to. It's fair to say these numbers will be different for each trader. What I've shown you here is from my own personal experience. I have been actively selling options on Robinhood over the past 3 months, and let me show you my results. Sorry, I'm blurring my balance here because currently I'm working on my $25,000 challenge and I don't want to spoil the results. It's going pretty good so far and I will make an update very soon. Anyway, this week I am down, but overall for the month I am up 11%, and for the last 3 months I am up 30%, which is an average of 10% per month. Now, granted, there wasn't any big correction in the market over the last month, so that's why I was able to keep this uptrend. It will be interesting to see how these numbers will change when a big correction will occur, and I'll probably make a video about that as well. Overall, looking at a bigger picture, my goal is to make an average of 4% per month. There are many other strategies out there, more confusing than this, with greater risk, better returns. I'll definitely talk about them in future videos, so consider subscribing if you enjoy this type of content. With that being said, be careful out there and go make some money.